Hello, and welcome to Trading the Trend. My name is James Boyd. We welcome you on this Halloween Eve. I got some festivities tonight. Was working on those last night as well. So hopefully you're getting ready. My granddaughter, I got two of them. Yeah, they're looking forward to it. So hopefully you're getting out there and getting ready. Now, just real quick, we always ask ourselves every Thursday. By the way, you should be asking yourself every day, what trends are you riding? Which ones? Now, some of those trends might have been pulling back, and you're maybe trying to get in that trend. Now, the hard trends we talk about, we're typically talking about trends 2 to 3 weeks to 2 to 3 months, somewhere in that time frame, right? Kind of a shorter term to intermediate is what we're looking for. Now, you might go longer, but that's kind of the reference point we're looking at. Now, we also got Connie Hill in the chat. We welcome her here as well. We got many of you. RS9651. We got Will, Josh, my friend on YouTube, Debbie, and many others. We also got Wiley with us as well. Just want to make a quick comment real quick. Some of you mentioned when Barbara came to my house, put all those Canadian flags there, so much for the security guards and Jack's the security guard dog. Oh, I could have let the security guard dog go, Jax. Barbara recently had knee surgery, so I didn't want Jax to chase her down the street, and I could hear Jax barking at the top of the stairs as she was doing that. So Jax, I just had to pull him back and say, let this one go. Anyway, a little fun there. Now, just real quick as we get started, remember we do post educational content on X. Join us there. You'll actually also see announcements there as well. Connie will post hers in the chat. Also, quick reminder that when we talk about stocks, but we also will talk about options. Options carry a high level of risk and are not suitable for all investors. When we also talk about the information, it's provided for general informational purposes only. When we also talk about technical analysis, some things, not everything's technical. Some things could be fundamental, macro, micro, intermarket analysis. Things are not just moving by technical analysis. That's a key part of it, but not the only part. So understand that, and understand that maybe different type of analysis may assert some different views, but sometimes it's good to get a different viewpoint. And also remember that the paper money software application is for educational purposes only. Investing involves risk. Also, quick reminder that when we talk about, let's say, short options, those could be assigned prior to expiration. Also notice, because they're American style options, if we talk about futures, the price of futures, we're not trading the futures, but understand that futures are maybe not suitable for all investors, okay? And also, if we talk about the Forex prices, okay, that is not suitable for all investors as well. There's separate disclosure for each one of those products. Be aware of that. Now, just real quick, normally we like to look at the markets first. I don't want to do that. I actually want to talk about current positions. Now, we're going to talk about some positions that had earnings, like yesterday, like Microsoft, but we're also going to talk about some positions like Apple that has earnings today. We need to actually talk about that because there's two positions in the paper money portfolio, and I want to talk about those first. I also want to talk about some gold positions that we've been in defensively and talk about maybe exiting the protection given the sell-off in the price of gold. So let's talk about our current positions first. What I want to first do is I want to kind of start with just one real quick since we're here. So why would you actually come to this class? Well, a lot of times you're thinking about, I want to learn about trend, I want to learn about technical analysis, fundamentals, how do I use the Thinkorswim platform, how do I put the strategies on, how do I actually kind of see trade examples of where someone got in and out? Well, that's what we're going to do right now, okay? Now, this is not going to kind of just be a talk one way. It's going to be a two-way conversation, and I want to kind of just make mention of the stock position that we did yesterday. Now, yesterday we talked about Microsoft, and we talked about not having the order fill until 9:30 my time. My time being Mountain Standard Time, Eastern Time, that'll be 11:30. Now, what you're now going to notice is we had a limit order on there. Now, think through this. Last night we saw Microsoft drop down. If you had a limit order at 5, let's say 5:30ish, and the stock gaps down to 525, what do you think through even before the market opens? Well, you're probably thinking through, A, do you want the shares? And two, how low is it below the buy limit price? That's something you should think of. I mean, if we had a buy limit at 530 and the price in the pre-market is at 500, there's a pretty good chance that we could actually get filled at a lot lower price than 530, and it maybe trips out the stop at the same time. That should have been going through your mind. Now, if you take a look at, let's say, where that buy limit price is, where we got filled was 525.30. It's at 526 and change. We're sitting there, okay? Now, you got to ask yourself, where is that, okay? Is this something maybe where the investor really wants to be in? Is there a stop on it? There is a stop on it. That stop is at 516 and change. Did it go down after it was filled? It did. And we got about another $10 to work with. And if it doesn't bounce then, it could get stopped out. So that's probably what many investors were thinking. I got a buy limit order. How much lower is it than the limit price? Does the investor maybe even want to move that time-sensitive fill to maybe the end of the day to try to get through the volatility of a post-earnings reaction? So when I say adjusting the time, if I went into, let's say, Apple for just a second, and I said, hey, I want to buy those shares about Apple, but I only want to do it at a specific time or after a time. Well, all we're going to do is go back to what we did yesterday. Click on that bottom right, that little gear right there, click. And what you're now going to see is if I click on this, you can say submit the trade at, and if I click on that, I'll say, okay, let's set the trade for tomorrow, hypothetically, but I only want to do it in the last 1 hour of the market. Now, you need to actually be aware of this. Is like, what time does your platform say? Mine is actually my current Mountain Standard Time. So if I put in 1300 hours, that's 3 p.m. Eastern. That's 1 hour before the market, okay? So if you're trying to put trades around earnings or give it some time, that's how we did that trade. That's why it was delayed from yesterday. Okay, now, don't have anything more to say on that. The other thing actually on Cisco, getting a little push on Cisco, still grinding about $1.34 on Cisco. I'm going to say that on Delta, we've missed a little opportunity to be a little defensive there. That has actually been in trend 1 on the daily chart, trend 5 on the weekly chart, and we've actually had 5 to 7 days where the whole moving averages have been red. We're painting red right now. If you go look at actually Delta, it looks like it might kind of try to turn back up, but there was some missed opportunity to do things like cover calls or collars on that with 100 shares, okay? Now, one that I do want to go down to just real quick is if we go look at LRCX, shares of stock sold the call. Now, can anyone actually tell me just real quick what the maximum gain was? What's the maximum gain? Now, as I'm getting that answer, I'm going to go ahead and actually just write it out. 155 is the short call price, so we know that's the cap, right? Well, where'd you buy the shares at? If you don't mind, I'm going to put 147.50. That's 147.47. But for just clean math, let's just say, let's round it to the nearest 50 cents. So the stock could go up 750 from where we bought it, 147.5, up to 155. Are you with me? Now, I'm telling you, you got to run through the math. Everyone wants to be a millionaire typically, but they say a comment like, well, I'm not good at math. Well, how are you going to be a millionaire? Okay? Millionaires tend to be good at math. Now, what was the premium? I mean, we wouldn't agree to sell at 155 if we just did it for free. I doubt that. And the premium received was 475. So the 750 represents the difference between where we bought the stock and the short call strike. The 475 represents the call premium. So if we add these up, we're going to get grand total $1,225. Now, where are we now? We're at 630-ish of the 1225. Now, my math isn't perfect, but we're kind of sitting on, I mean, literally sitting on right here, about 50% of the maximum gain, and it actually has 22 days remaining. Now, this is your judgment call. Do you think LRCX can keep going? Is 50% enough for you to say, James, I would take that. That way I don't have to hold all the way to expiration. Okay? Is that something you would consider? Now, some of you might be saying, James, show me the chart. Okay, show me the chart. I feel like we're playing that game called Open the Case. Open the case. Now, if we looked at this, we're probably thinking like, well, what do we see on the chart? It kind of looks like a pole, right? If we sell here, we're kind of selling at what we think is the top of the pole before the what? The flag. So if we sell here, we're saying, look, we want to try to sell in this 5 to 7 day pole. When I say pole, I'm talking about a bull flag pole where we tend to go up 5 to 7 days and then pull back. Now, here's the thing. We opened the case. We showed the chart. Would you sell at 50% or would you say, nah, James, ride it out? What would you do? Okay, now Tammy actually says, where's the 630 from? Well, that 630 is right here. Now, I said 630. It was actually 633 when we looked at it. The 625, it's moving around on us, Tammy. We have $1,328 from the shares, and the call is upside down 702. So when we said $630, that's the net gain from the shares of stock and the short call. Oh my gosh, a lot of you are actually saying ride it out. Okay, now Kevin is actually saying take the money and run. Okay, now let's say the investor says, I want to take the money and run. So all we're going to do is on the keyboard, just hold the shift key down. Hold the shift key down, okay? And then what I want us to do is just click on, with our mouse, the second row while holding the shift key down. So what it does is it highlights those lines. Now, James, are you still holding the shift key down? Yes. Okay. Now, what are we going to do now? We're going to right-click, create closing order, and we're going to click on that top line. Wait, are you still holding the shift key down? Yep. That's why you only see me with one hand. So I'm going to go right-click, create closing order, and we're going to sell the covered. What does that mean? Well, we're going to buy the call back and sell the shares, and we're going to try to harvest, as Bill would say, that $644. Okay? Now, we're going to sell covered. So you're now going to see that we're buying that call back there, selling those shares there. Okay? And we got in for debit. Now we're going to get out of the credit. The difference between the debit and the credit, debit is what you pay, like a debit card. Credit card or credit is just kind of what we're getting in return. We're trying to make the difference. Now, is there a commission? The commission is on the call. It's not on the shares. Okay. Now, what I'm now going to do is go confirm and send. And you're going to see there's the commission on the call. And we're going to go ahead and say send that. Now, here's the deal. What about half and half? Can't do half and half because I only have 100 shares. Okay. If we had two, I could see that. Now, in this case, what I'm going to do, now, by the way, you also might be saying half and half because you might say we have 600 more to go to the upside. We could actually give back the 600, but you got to remember you're also risking on top of that. Okay, so it's not quite half to half if you want to think of it like that. Now, the other thing I want to kind of bring out is one of the questions I actually get a lot is, hey, when would you take the cover call off? Well, let's use a quick example before we look at Newmont and Apple. 100 shares of Uber, okay? 100 shares of Uber, and the stock is down to 193, okay? Down to 193. Well, if we go to Uber for just a second and say, show us what you got going on, over the last couple of days, and let's kind of just show this, as the stock was going down, 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 the investor is probably saying, I'm glad that I have a covered call. I'm glad that I have a call or some type of protection. But when you start kind of getting the moving averages to go green again, the investor's thinking, could this be turning back up? Okay. Well, as we'll see in just a sec, but how do you make your position more bullish? How do you make it more bullish? Well, if we go back to the position, when you sell a call, that is negative delta, okay? So when we put this trade on, the delta is probably 30 to 40. And why has the delta gone down? Why? Well, because the stock's actually gone down. And if the stock has gone down, there's lesser chance of the stock to be above the strike price. Well, if there's lesser chance of the stock being above the strike price, the premium drops, and it did. And now what you're going to see is that delta right there is saying, what's the chances as of right now? The stock will be 1 penny above the strike price. All right, now, so here's what's happened. The stock is down 208. We've lost, unrealized loss, but we could try to harvest that call premium, which is about 64% of the premium. Doesn't have all of it, okay? 64%. Now, could the investor take that $1.75 and theoretically reduce the average price of the stock? Well, that's the idea. So if they bought the stock at $98.65, okay, and they collected, let's say they got to keep that $1.75, it's like reducing, theoretically, the stock down to $96.90. Does that make sense to you? This is the original purchase price of the stock, and we could see that right there. The $1.75, that's the option premium. If we were able to keep that and stuff it in our pocket. Well, it kind of means now that, hey, we kind of theoretically own the shares at $96.90. Now, if you look at a brokerage statement, it's not going to tell you that. It's going to say, where did you buy the shares of the stock at? It's going to look at the option premium as a separate transaction. Okay, that's why we said theoretically it reduces the average price of the stock. Now, if you take a look at this, with the stock actually kind of turning up a little bit, let's go back to the chart. Let's go forward here. When to take off the call? Well, the investor might say, I'm going to take off the call when I start to see the price starting to go back up, hence the moving averages turning green. So a bullish entry on the stock price graph is most likely the exit of the short call and or the caller. Okay, could be. That's one way. Now, if we went forward just kind of one more day, 2 more day, 3 more day, 4 more day, 5 day, etc., there's been a little push up. So what does that probably tell us? Probably could have bought the call back for cheaper, because as the stock price goes up, the option premium goes up. The option premium goes up. We actually we didn't make as a high as percentage. Now, what I'm going to do is if I go drop this back for just a second, we got this actually coming up on the 4th. We got earnings. Now, what I'm going to do is we're going to roll the call. Now, wait, why would you roll the call versus just getting out of the call? Well, we would roll the call because, well, if we're going to sell the call right before the earnings, the volatility might be a little higher. That's number one. Number two is you have a diminished gain in which you can make on that call right there. We can only make 97 more cents. So what I'm going to do is I'm going to right click right on that 97. And what we're going to do is we're going to hold the shares. The stock is still holding the support. It's just not really breaking out. What I'm going to do in this case is we're going to create a rolling order. Rolling order just means we're going to buy back the call that we have now and then try to sell another one. Now, you've got to kind of keep in mind, where'd you buy the shares? Well, we bought those shares, if I went back to this, we bought those shares at $98.65. So we're probably thinking, could we sell a strike higher than what we bought those shares for? Okay. Now, if we did that and I went to this trade tab, the call that we're buying back is the 21st November, the 110. Now, we now get to choose, could I just stay in the same expiration? We could. There's still some time left. And the biggest question we want to ask ourselves, is there some premium? Oh, yeah, there's some decent premium. When we actually take a look at the premiums, even if I sold the 100s, they're $325. Sold the 101, $292, $260. So now we don't necessarily have to go out all the way to December because these ones are still pretty juicy, which means that we're just saying higher implied volatility. So I'm not going to roll farther than 21st November. And we're going to actually say, let's go to the example of, let's say, the 100. Now, the one thing you got to remember something is, as trend traders, man, we always want our stocks to move, don't we? Is there anyone else besides me that always wants their stock to move? And how come it didn't go up more than it did? Well, that's the thing is, trend is not constant, okay? And the only thing that is constant is that time goes by. Tick, tick, tick. That's the only constant, okay? So some investors, they say, I'm going to ride trends, but I'm going to maybe try to use cover calls as a way to try to capture some time decay to try to push down what I actually own the stock for, theoretically. Now, what we're going to do is here, we always kind of say the language, we would consider rolling if we can do so for a credit. Well, it just so happens we can roll for a credit and we're not going the next month. This expiration, this obligation is for the next 22 days. Okay. Now, so Jay Richardson says, I wanted to move the intended direction. Well, that's the problem. It doesn't always do that. Okay. Now, and there's also some times where you say, look, I have these stocks and I want to actually own some of them for just a longer period of time. And sometimes those good quality stocks, they consolidate and they're making higher levels of support. That's fine. But I just don't want it to actually chew up the unrealized gains too much. And sometimes the investor says, I think it's going to pull back some. And while it pulls back, pull back, but just give me some option premium while you pull back. If I'm going to sit here and watch it pull back and give unrealized gains back on my shares, give me something on the other side called the option premium. Now, what I'm going to do is confirm send, send. Now, what I'm going to do is last one just real quick that we need to discuss briefly. And this was one of the questions we had early on is we sold a put on Apple. And that was about 9 trading days ago. And that put was sold for $4.25. Now, how many of you in the chat enjoy or like selling puts? Now, it could be selling puts by itself, like cash secured put. It could be a short wide put spread like this is, or you like a short put vertical. Irregardless, how many of you kind of like that type of strategy? Now, you got to think about something. Some investors say, look, I like selling puts because I'm trying to pick where I get long the shares of stock. So what does that even mean in English? Okay, translation. Whatever strike you sell, that is where the investor could become long the shares of stock. So if you sell the 252.5, that is going to become potentially the purchase price of the shares if they're assigned the shares of stock. So if they're assigned the shares of stock, it means someone who is long the put exercises their right, and whoever short is the buyer. The buyer of the put, they sell. The seller of the put, they buy. Let me repeat that. Whoever is the buyer of the put, they're selling the shares. Whoever sells the put, they're short, they're the buyer. Okay, I had to say it twice. I know you're going to say that again. Okay, so what I'm going to do, now the question was from before, and the question was, James, example given, and this question was, okay, now this is from Greg. Greg, what's going on? JB, he says at JB, regarding the wide put spread, so here we are, I usually roll the short. All right, okay, so let's do that. Going back to, let's show that. So if we roll the short option, what are we really doing? Well, here's the thing. Would you roll this short put? As long as it has more than 20 days left, it does. So what I'm going to do is in this case, I'm going to right click on that and we're going to say create rolling order. Now what I'm going to do in this case is if we do that, the option, the second row, that's the one that's in the paper money account now. It's buying back the 252.5. We can see that over here on the right-hand side where it says POS. Now, what I'm going to do going in over the earnings this afternoon, okay, a lot of people are probably saying, James, don't ask me what I'm doing this afternoon at 4 p.m. Eastern. Of course, I'm watching Amazon and Apple's. It is really interesting, okay? So let's say the investor says, I'm not going to roll out in time. I'm going to do the same expiration, but I am going to go up in strike. Drastically so? Not drastically. Let's say we just go to a 20-ish delta. So what I'm not going to do is we're going to say sell the 257.5. Now, you might be looking at this and say, well, this is a past trade. No. If you roll, that is a new position. Your unrealized profit or loss is going to come from this new position of the 257.5. So trade number one that we're actually going to do is we're selling the 21st November, okay, there. And now what you're going to see is we're going to push up to 257.5. Now, How many of you are thinking, James, don't be chicken? Okay. Okay. Someone's saying, I can hear it. Okay. Someone's saying, James, go up a little bit more. Okay, fine. If we went to the 260, that still has a 25 delta. Now, if we take a look at this, if we went to the 260, it's a little closer to the strike. It's going to give us a little bit more credit. And why, this might be confusing for some, but wait, I thought the 260 put is 284. Why is it only giving us back or giving us $1.41? Well, it's because we're giving up some of the remaining premium from the 252, giving that back, and then selling the 260. And it's the difference. All right? All right, so there we go. The trade number one we're going to do here is we're going to sell the put on Apple over earnings. Let's visually go look and see where that short strike is. The short strike on Apple, if we pull that up and say, where is it? Now remember, think to this, wherever you sell the put, that's where you're thinking the stock could stay above, number one. Number two, you're actually saying that's where I don't mind in being the buyer of the shares at the strike price. Now that sounds good now, but let's say the stock goes down to 250. Are you going to say that now? And now here comes regret and pain. So you got to understand something. The investor who sells the put, they're on the hook. Okay. Now, just because the stock goes down to 258, 255, 250 does not mean they get assigned the shares. That's undetermined. That can happen at any time. But what does happen is when they sell the put, the prices of the options change. The put changes as the price of the stock changes. Okay. So that's what's really going to be showing up in the net liquidating value is how is that one position doing, and it's going to affect how that position is doing and the portfolio is doing. Okay. Now, obviously, in any one of these given trades is wonder if the stock gaps to the upside. Well, those investors might be looking for 50%, 65, 80% ever, 80% ever. And in this case, try to play, that'd be the nice scenario. I'm talking about the downside. So we're rolling this put. Now, here's the deal. Do we need to roll the long put? Don't need to, because there's still 22 days left. If we were going to roll out to December, that November put is not going to help us as far as reducing the buying power because there's different expirations. So if this short put had less than 20 days, if we said, hey, I want to do the December and we want to keep it where the max loss is less, we would have to exit that put or roll it to make it where the short put and the long put have the same expiration. We don't need to do that because it's above 20 days. Okay, now, so what I'm now going to do is, so I want to kind of address that. Why? Because Apple has earnings. Now let's swing back to how we normally start, okay, before we talk about some new positions. Now, what I want to do is let's kind of pull this up for just a moment, and let's just take a quick fast fire. So if we look at the SPX, oh my gosh, we're down. Okay, bear market. That's what my bearish friends say. That's always so funny. I've actually noticed in 25 years of doing this plus, when the markets go down even 0.3%, they call tops and bear markets. And it's kind of funny, it's 0.3%. Okay, kind of crazy actually when you think about it. Okay. Are we still above the support level 67.60? Yeah. Okay. Yes. Have we faded back from the top? Yes. Could this actually, is it unusual to think that this might be the start of the flag? Not really. We've actually had this little run to the upside here. And again, I say it again, when you get kind of like a bull flag pull, there tends to be a 5 to 7 day average length. Out of those 5 to 7 trading days, it's not uncommon that one or two of those is red or could be red candles. Once you go up those 5 to 7 trade days, the stock or index or sector tends to exhale. Not unusual. Now, the one thing that we will say is when you look at a lot of stocks yesterday, a lot of them, man, they were up there. Okay, that's why we've been talking about the moving average envelopes. And so this concept of covered calls is probably not a new concept because a lot of those stocks might have kind of been stretched, meaning they're high off support. NASDAQ, there it is, looks like the S&P. The Dow Jones itself, that's the one that's been a little stronger on the Dow Jones, okay? That one kind of, what type of candle do we actually have on this today? Well, it's really, so far, if we can close here, it's a bullish engulfing candle, okay? Now, if you look at, let's say, the Russell, this is one that we continue to say is lagging somewhat. And it should, now, when we talk about the trend of it, it's still there. The diagonal support level right there, horizontal right there. But the biggest thing is we need to hold 2470. Now, this is what's kind of nice. You get to pick what you like. Some people don't like small caps compared to the large caps. What's the difference? Income statement size, dollar amount. We also actually have balance sheets, higher amount of assets, potentially greater amount of equity, a larger scale of what they sell, greater ability to actually borrow money, or currently investing in capital expenditures right now to create new products and services, potential for partnerships and so on. So the biggest actually thing is people play small caps because they're trying to maybe get a higher percentage return, but a lot of those companies in there are not profitable, okay? And you just have to determine, is that something you're really looking for, okay? Now, when we talk about sectors just real quick, and let me kind of put this here on the left-hand side, we'll talk about the new example. If I pulled up the sectors, let's go to just actually three here, pull it up, and just kind of look at sectors. Now, transports, it's not breaking out, but remember, this goes right back to Uber. We already kind of pulled up the example of, let's say, Delta. I wouldn't say there's anything new on transports, okay? There has been some trucking companies that got a pretty decent push. Where we are kind of maybe getting something where we're getting a little bounce, and the sector is not showing it here, some financial stocks, they actually look quite bullish. Can anyone tell me any financial stocks that look like they're kind of getting a little push here? Any takers on that? Goldman Sachs? Little higher low after a push? What about JP Morgan? Okay, Jamie Dimon's balance sheet maybe going up even higher, okay? Like he needs it, maybe he does, who knows? And if you take a look at, let's say, Morgan Stanley, that has not been weak, okay? What about Bank of America? Okay, I almost said Bank of Canada, BA, Bank of Canada, okay? Bank of America, that's a brand new high here today. What about C? Pretty good chance of reversal on that one. It's kind of like an ascending triangle coming off the bottom. And don't forget Wells Fargo, your next stage. And if we look at Wells Fargo, that doesn't look like weakness, okay? It looks like it's kind of like forming that a classic ascending triangle, okay? So the financials, if we're kind of saying which sector kind of looks like it has a little push to it, it's really financials, okay? Now, if we go back to, just real quick, any other sectors that we missed? Real estate, nothing. Still wholly sideways. It's almost like you're driving through Nebraska. Now, remember, I was born in Lincoln, so I'm nothing against Nebraska. If you look at healthcare, grinding away. It's not a bounce or a breakout, just grinding. Energy, trying to get a little bit of a push. You could say a little short-term flag. Now, I do want to kind of say in the world of, and let's kind of transition a hair here, okay? Are there any energy stocks that are bullish? Any energy stocks? Now, of course, when you think about energy, the sector, you think Exxon, Chevron, ConocoPhillips. That doesn't necessarily mean that's where the trends are. But if we actually took a look at a couple stocks, you're going to see that a couple in there that is PSX, which is the Phillips 66. Let me pull up the 3-year weekly chart first. This has been one that's kind of been grinding back to the upside. And the second one I want to kind of submit is MPC, Marathon Peak Petroleum. Okay, now this is kind of an interesting one. We call this a stair step. Stock runs to the upside and then plateaus. Notice where the plateau was. The plateau was really the old highs. Those old highs were also the new lows. Now, stock actually runs to the upside. Old resistance becoming new support. And all of a sudden it falls right back down. And the old resistance becoming the new support. Now, the old high now actually becoming the new floor. My gosh, I mean, this is like as technical as it gets. The old high becomes, think of the higher high, really actually becomes the higher, help me out here. Higher low. That's correct. I could hear you. Thank you. So now we're thinking, Kate, we just had a higher high again. Could that area right around 200 potentially become the higher low again? Now let's start here, okay? Now let's say the investor said, look, James, I want to really become, or I want to actually kind of try to maybe diversify away from so much technology. Everything that's been going up, at least in the last week or so, has been tech, more tech. So let's say the investor says, look, I want to kind of maybe diversify a little bit into different sectors. And let's say the investor says, look, James, I know we're coming up to earnings right here on the 4th. Now, when you go back to this chart, it kind of also has like a pattern. It's a leaner shoulder. And what you're going to kind of notice is maybe like a inverse head and shoulder, which is not at the bottom, it's actually at the top. That's a little unusual, but it's still the same type of idea. Now, a lot of people, when there's earnings like that, it spooks them, okay? Well, let's kind of go take a look at something real quick. Let's say the investor said, look, I like to buy stock, and I, for example, just want to double check, is it possible to maybe do something like a caller on it, like buy the shares of the stock and then maybe sell a call and something like that? Well, first off, the volume on the stock is not that high, okay? So it's kind of making us speculate that if we go look at the calls, out of the money, it's $1.30 wide there, boo, 60 cents wide here on the put side. That's not great. 70 cents, really not that liquid. The open interest in the entire world. This is the entire world, okay? 143 contracts, that's it? It's not that much. So if we show this example, what we're gonna do is we're gonna understand we wanna try to give it some more breathing room. And I'm gonna do this a little faster here. On MPC in the paper money account, we're gonna right click on the graph itself, buy custom, down to with OCO bracket. Give me the target, okay? Where's the target? I'll zoom in so we can kind of get a numbers idea. As I get that number from you, I'm going to go back and set my stop underneath this most recent higher low. Now remember, real simply, higher lows are just the red and green candles side by side. The red candle signifying where we pull back to the lowest point. The green candle was the first up day after the pullback, the lowest pullback or red candle. Now, if I look at that, it's 161.65 less 2%, 187.81. 187.81. Now, when you pull this up, there it is, matching the calculator. That's fine. Target-wise, David actually says 220. Let's double check David. We got to double check David. Someone has to double check David. Well, if I went back and said the base here to the resistance area, it's about 9%. It's going to be about $16. If we're talking about from the base to the kind of the resistance. If we take that $16, and I'm just going to kind of right click on that line that I drew, duplicate it. Now what we're going to do, and we're going to see if David is as trustworthy as we know that he is. Well, now you're going to see where's that target. David says 220. Well, good thing we checked. David's always projecting a little higher, but I like that. We got about 215. Hi, Jack. How are you? So we got the number. I'm going to put 215. Now, if David chooses 220, obviously just a higher target, lesser chance to actually get there. But this is really like an 8 to 10% move. For many swing traders, this is what they're trying to look for. These 8 or 10% moves where it's more probable that it could go to. That doesn't mean it's going to. And what I'm going to do here is I'm going to put $7,500. That was our position size. Okay? Now I'm going to tell you right now, as someone who's done this at least 3 times, sometimes as investors, we just want to go for it. Okay? We just want to just say, hey, I'm going to hang out to dry, if you will. And maybe this one's going to be the big one. I've already done that. You can have your own experience. We're going to stick to the tried and true position sizing. And this represents $7,500 of capital. Okay. We got an entry, target, stop, good till canceled on both. Okay. Now, Silas actually says, Fib says 219. Well, in that case, forget the 215 target. Let's put the 220. I'm joking. So Silas, you actually kind of use the fib there. I'm using kind of the measurement technique from just drawing lines. Okay, but I understand what you're saying. Now remember the stop order. If stock actually goes down, it says sell the stock if it gets to that price or less. Okay, so the moral of the story there is it could be filled at a lower price. I don't know if this is going to fill. Oh, took it. Okay, yesterday I got rejected. Now, I want to kind of just show a couple quick stocks that are maybe just like the question was asked about a couple stocks that announced earnings yesterday. And by the way, some of them are not pretty. Now, Chipotle, don't laugh at me, but I was going up to Park City and I ate at Chipotle, not a recommendation. I realized I had not ate there in a long time, and I realized why they call it Chipotle. I was crying when I left that restaurant. Okay, my wife was like, why are you in tears? Okay, that's hot food. Should have read the disclosures. Okay, now, moral of this story is you're going to see that actually this Chipotle, man, fresh new low for it. Now, I'm going to kind of throw out there another one that I think could kind of maybe be on a bearish sentiment watch as well. Lulu. Lulu has actually hung around the low for a while. And maybe you're starting to see less and less people wear stretchy pants. Now, you know that, like clothes in general, nobody wants to wear Bugle Boy. Now, I'm dating myself. Some of you might not even know what that is, okay? Bugle Boy, JCPenney's, they always like to wear like the cool brands, okay? Maybe Lulu is not as cool as it was before. And if it's not, maybe that level of 163 is not as strong as we think it is. I think with actually Chipotle going down, could Lulu be the next one to drop? Yeah, sadly, that was my wardrobe, growing up. Bugle Boy. Yes, sir. Now, let's look at one more just real quick. One of them that's actually showing a little... Now, look, here's the deal. I mean, it was a rough childhood. Let's just admit it. I guess I came through, but it was tough. I'm not going to lie. There's still some leftover effects, but I'm still here. Now, here's the deal. If you take a look at FedEx, one that we're going to kind of keep an eye on that's kind of broken the top of the channel, FedEx. Now, that one actually being stronger than UPS. The last thing we're going to say here is, guys and gals, this afternoon's earnings, it's going to be big. It's also going to kind of tell us the shape of the consumer, okay? Are they buying stuff? Are they not? Are these companies, how much are they like selling in terms of revenue, and what's their profitability? And the biggest thing is, what is their forecast? So keep an eye on the Amazon, the Apples in the after hours. I'm out of my time here. The last one that I'll say that hasn't also been as good is Royal Caribbean. So there's a mixture of bullish and bearish stocks here. Keep that in mind that not everything is bullish. And if you said, James, we haven't talked about bearish in a while, well, there's a reason for that, but there are some ones that are going down post the earnings. So that was a good question, and I want to make sure that I addressed it, okay? So with that said, I want to thank you so much for your comments and your participation. Now, remember that you can go to YouTube. You could search for Trader Talks Schwab Coaching Webcast. Now, when you go to that page, you're going to see right in the middle, it will say subscribe. You can subscribe for free. Second, you could also go to this playlist. You can bookmark it. And now what you're going to see is this will give you a playlist for this session, previous weeks that we've actually done. And you can go back and watch those and get a feel of those sessions as well. Stay tuned for our next webcast coming up right at the top of the hour. I want to say thanks to Connie for answering those questions in chat, and thanks to all of you as well. Also, remember with what we discussed, it was done for example, illustrative purposes only. Big afternoon coming, okay? I'll be watching, and I'm sure you will as well. So with that said, remember that all investing involves risk, and the goal is to ride that trend. That said, have a great day. Take care. Bye-bye.